Boom. We are live, ladies and gentlemen. Thank you for joining us today. It is Monday, January 23rd at noon-ish our time. Thanks for joining. Last week's video, we talked about Bitcoin's move to $42,000. That's where I believe we're headed. So we're going to go over some of those steps because it doesn't always happen at once. And a few other plays that we've been watching have just absolutely exploded. Magic, almost up 300 to 400% since 500% since we initially started looking at it in the private bear group, but on the public front end around 200%, which is fantastic. Huge growth within the gaming ecosystems. We're going to look at Gala, Ape Token, Sand, Mana as well. Just in general, we'll take a look at the whole ecosystem. But for now, start with our shining North Star and guiding light of this thesis. Bitcoin, peer-to-peer money, the choice to be able to use money that's not specifically given to you by the government, and a reason to trust that money. It's a pretty valuable concept. For those of you that have been watching and been doing your homework, we've been moving through this beautiful accumulation range. We've finished what appeared to be a spring, and now are moving to the top of the trading range. So we're going to be at around $25,000 to $27,000 here, probably in the next few days. It's likely we could see that this week. So it could get pushed back, but I don't think so. Usually in the bull market, and when I mean bull market, not like the larger macro bull market, but this bull market, which is just the cycle upwards that we're about to go through, and where it will finish is kind of based off of a few key ideas. And the retracements are always really thin. The market maker wants to give you effectively no opportunity to get in. And if we look at Bitcoin here, so far, every single one of these trading ranges since we've left have been really small. This one I suspect is also going to be very small, and then it's going to shoot us up to around 25,000, and then that's where we'll see our first star capitulation new trading range. So that's where you could see something a little bigger, like between 25 to 23,000, and then I do suspect we're going to go higher. Now, what's the basis for going higher? I know the macro story is it's broken. I don't even understand how bad it is necessarily based off some of the data we've been looking at. I don't talk about any of that data on this channel because we don't want to get banned from YouTube. But if you know what I'm talking about, I'm sure you can guess. If you know, I guess is what they'll say. If not, I mean, you should get better at homework maybe. But nonetheless, the macro story is totally screwed up. It could get better if we were to remove all the criminal behavior that's currently taking place in the scientific and regulatory space. But until then, we're in some pretty dire straits to overcome that. So usually what I kind of suspect is happening, because those things might be coming to light, the movement in the market is also a part of the distraction. They want more people distracted with stimulus while other things come to light. So that's kind of my sentiment about why this bull market is happening. It's used as a distraction for a bunch of other things that are taking place. So the top of the range here is very likely. Now, a big part of the sentiment is, do we continue outwards and upwards to around $29,000, $30,000, $40,000 and hit those breakup points and continue a bit more of a larger market cycle throughout the range? And we've talked about this before. We've looked at Bitcoin. Let's go here to the daily. Right. So one of the assertions that we made right when we got up to this top point was that effectively what you're witnessing was the start of phase A, and then there was phase B, and now we've just finished phase C and are coming back into the trading range effectively. So I do suspect that right on this side is where we'll get our first significant test, and then this could be a move into larger areas of Bitcoin. Do not underestimate that. Now, I'm not saying that's the case yet, but we've been watching this trading range as an extension since basically February 2021. The idea that this was a larger accumulation range that was going to take place. I didn't think we would come down this low, but I also apparently didn't know that we had so much fucking curly-haired shillboy leverage in the ecosystem. So that was, I guess a lesson. But effectively, the leverage had drawn us down here to these a little bit lower than I thought we would go. I thought we would stop at around 25,000 here. I made the case for the spring right at the bottom of the trading range as a retracement in basically 0.10 for the three peaks and domed house, which we've seen in other traditional markets, but we got pushed down to that leverage, bankruptcies, and that ultimate fear capitulation mode. I believe we already went through. I believe that was blood in the streets for our ecosystem. Everyone's bad talking, oh, crypto's dead. So that's probably the spring to I would guess that that's actually the spring of this much larger accumulation range has taken place. And we've looked at this in the past with things like Bitcoin, so let's use one of our old charts. Yeah, here we go. So if you've been with the Arcane Bear family for a while, you will recognize this chart. We drew this way back in the beginning of March of 2020, and nothing about this chart has changed. See this red line around 24,000? I thought that's where we would come back to. This is what we did with Ethereum. We came right back down to this longer accumulation regression line with Ethereum, and we held there. But with Bitcoin, again, there's just so much extra leverage in the ecosystem I was not officially aware of. Probably through my own choice of ignorance, I guess, at that point, but that's a conversation for an entirely other topic or podcast, maybe. Nonetheless, what I wanted to do was take a quick retrospective and remind everyone that one of the interesting things about Bitcoin here is the multiple trading ranges that it took for the 2017 to 2018 cycle to complete. So our selling climax back here in January 2019, we dropped from $6,000 to $3,000, was actually in itself a trading range. The idea of scale invariance, and that you've got turtles all the way down. That's another way to say it, and it'd be another indicator if you're a smart one. Turtles all the way down with these types of indicators, with this type of trend analysis. So not only did we have a smaller trading range here, we had a much bigger trading range that formed here, where the selling climax moved up to the automatic rally. And I kind of think that's what we're going to see with Bitcoin here. We could move as high as 40 grand and then come back down to create lower secondary tests around, like, say 25, 30 before moving much higher. Based again off the idea that governments are massively losing trust. There's a whole lot of criminal behavior that's been going on apparently, and more people are starting to wake up and recognize that for the first time ever. So that's a pretty big deal. I don't know how to account for that yet though. So I try to remain as optimistic about what that looks like as possible. And so we're going to go up, but the macro story is totally broken. If we start to lose some of these battles, effectively, we could see more downside. And I'll make a fun argument here for you guys as well. But ultimately, you will notice that the $20,000 point for Bitcoin was actually part of a much bigger trading range as well. And this is why this type of trading mentality is so interesting, is because we had a selling climax that was a trading range. We had basically the secondary test, the entire secondary test area itself was not an automatic rally. It was just tests after one of the primary tests. So it's difficult for this reason to judge exactly where the top of the market is, but the idea we've seen not just twice, but 3 times, 4 times, where again, the very bottom of the market cycle was its own accumulation range, which was inevitably just part of a much bigger accumulation range. So these things are really powerful to pay attention to because they keep repeating in cycle. Now, there's not always 4 years between market cycles. Clearly, there was no 4 years between this market cycle, so that's a no-go. But the trading range itself is consistent. And again, what's also unique is that each of these bottom areas here seem to have their own type of capitulation trading range, where it's a turtle all the way down type scenario. So I believe that what we're witnessing now is something very similar to that, is that the very bottom capitulation portion of the trading range that we just went through for Bitcoin. Let's go back to the other chart I had drawn up here. It shows that, boom, here. This is a smaller version of basically the same version of the selling climax that we had in 2019. So I suspect we go up here and then we start to produce what will become secondary tests and maybe a move into the top of the market cycle, because what is fiat currency worth? I don't know the answer to that. People still accept it today, but I don't know what it's worth in the future. And that's really what Bitcoin is a bet on. If you're betting on Bitcoin, you're short dollars, effectively. Very short dollars, like a hyper short of the dollar. But it's done very well. That trade has done very well over the last 10 years. So I'm not saying it's a bad thing. It's just volatile on purpose, I think. So this trading range that we're in right now, as it starts to continue, we could make an argument that we're only in phase, that this was that this wasn't a spring. But anytime you have massive climactic selling like we had in FTX, like that was pretty much the bottom of the market just based off fear alone. So I don't suspect we'll go lower. So this was probably the spring. So we're probably already in phase C effectively and moving up to test for the SOS and moving much higher. Now, how high we go, we're not sure. You kind of got to measure it each step of the way. But the Fibonacci extension tools, so it's kind of a fun way to go. So we'll draw this out. So we'll probably get to around 38,000 pretty easily as soon as we break out of this $24,000 range. We could go as high as 54,000 for just from this trading range, and then again form something very similar to what I just showed you guys, which is this bigger move up that had a longer trading range with a spring later on 2 years later that again was just part of a much larger trading range that had already been taking place. So this type of cycle analysis is super important to understand, and I think the more that you understand it, the easier it is to kind of tell the long-term macro timescales. I'm not really a great intraday trader, although I can get them right every now and then. We've seen a lot of growth in the ecosystem so far, so we'll take a look. Ape token was another one that we've been watching here. Now, don't get too excited because you can see what I have drawn on the right-hand side of the screen. When you start to see these cycles as well, so this is what's known as a widening accumulation cylinder, and this is one of the most bullish patterns I have ever seen. When these complete, I've seen as high as a 250x return on the back end of this. So I don't think we're there yet. It's way too early to say that that's the case, but I just wanted to remind everyone, like, be on the lookout if we do this because they're astronomical. So let's go back actually and take a look because we've seen this before. And if you'll remember, where did we see it? We saw it in Ethereum. Boom, Ethereum, right before Ethereum blew up, right at the back of the trading range. Again, if you look here, so this actually, the one I'm drawing on doesn't have all the data, but here you can see the spring, this finality here is what we have at the very start of this widening accumulation. So when you have a widening accumulation cylinder like this that forms right off the bottom of the spring, potentially like we're seeing here with Ape token, it goes quite a bit higher. Now, I don't think Ape token is going to go up as high as a 250x. Here I've got it drawn out to around $22 as a potential. So if we start to hit this widening accumulation cylinder out the back end of this too, oh my. And what I want to do next is lean into why this might be happening. So we've been watching the S&P 500 for quite some time. If you know that the S&P 500 is largely ruled by debt and kind of free money that the Federal Reserve prints. So we've just started to peek our little head out here of this long-term downward trend line. And I think we're headed all the way back up to 480 points for the S&P 500. And this is what I think is going to happen. I think you're going to see for the next 6 to 9 to 12 months, you're going to see ranges like this for the S&P 500. This is what we said all the way back in December 21st, although I did not take into account, again, just how much leverage there was in our ecosystem. The fact that we've come down to what appears to almost be the primary support of that trading range as well on this side, I think is super helpful. So there are other areas we've seen this. Let's see if we go to the Dow Jones Industrial Average. I might have to add it. Dow Jones. Where's? Oh, I'm in crypto. That's why. Industrial Average. I think this is it. DJI. Let's see if this has enough data. This chart may not have enough data, so we're gonna find out here. I have to go all the way back to the 1970s. Okay. Boom, here we go. Okay. So this is the 1970s for the Dow Jones Industrial Average. And as you can see, we had these really big markup cycles and then big downs. But we always came back up multiple times. So I suspect we're going to see something like this. Whether we break up bullish or not has yet to be seen. But this potential range here, this larger range like we saw, big, and if I get closer to, if this was on the daily, you'd see here, let's, can I go to the daily without mucking up the frame? No, it still mucks up the frame. That's too bad. It pushes me all the way back. Okay, well, nonetheless, we'll do it with the daily here. These big drops here, I suspect is what the S&P 500 is going to look like. Now, again, I don't know whether it's going to be bullish or not. We're too early in the potential formation of this trading range, but that's been the idea for the last few months now, that we're going to basically get this massive bullwhip effect for the next 3 to 5 years, where the markets are just going to go into gluts and overspending and shocks. The CPI is we're going to wake up and CPI is going to be at -3, and they're like, oh no, we're going to have to start giving everybody and their dogs money again because, you know, dogs need a new haircut. Whatever excuse the government can make up to give people money, whatever fake emergency they want to line up for, they will do that. And I believe that's the likely case. So up or down here, I think, is really dependent on the human's ability to overcome that kind of critical criminal regulatory problem that it's currently going through. If it overcomes that, we could be straight up for another 30 years for all I know. This could be similar to the 1970s on the break up pattern. But here we're at 402 points on the S&P 500 right now. We are basically totally outside of the range on limited volume, so there's a bunch of reasons to believe this is a nice bullish. Oh, I always hate. Is there a reset button? I think there's a reset button. I got to remember. Okay, so the fact that we were breaking out of this widening megaphone pattern too is also generally bullish, and I do suspect that we're going to go up here. So this will be a large market driver for the crypto sector itself, because all the general markets will be looking healthy. It's too early to say exactly yet that this is like we have a confirmation of a steady breakthrough. But one of the things that was really nice was this smaller accumulation range that took place here, the break above for the SOS, the backup phase, and the instant turnaround against resistance, and so far outside by a fresh 1.7%, which is huge in the S&P 500. I know it's small in crypto world, but that's pretty damn big in the traditional market. So these three things here, the trading range, the SOS, the backup, and the break against resistance, very positive sentiments for the rest of the crypto ecosystem. So when I'm looking at something like Ape going to $20, it's off the idea that the S&P 500 is very likely going to jump up. What is this? 15 to 20%. That's around 200% in our ecosystem. We're basically in a leverage play against the S&P 500. So again, I suspect that we're going to break up very strongly and continue this momentum. And we've seen that footprint across the board. So when we were looking at Ape, seeing these beautiful reaccumulation areas, what were we seeing? The same thing for Avalanche, the same thing for Gala, the same thing for Fetch, except Fetch is already broken out. Fetch is up 247% since it started to break out, and Magic just absolutely tearing it up right now. Such strong hands. Look at the back of this trading range we were watching the last time we chatted. It's up 180% since the last time I made the video with you guys here. We're like, oh, look at this beautiful trading range, this nice SOS and backup phase right here against the top of the against the top of the range. We made our entries earlier in Magic, so we weren't taking any secondary entries here. But look how high there is left for this to potentially go. So look, not only do we have a bullish breakout of the trading range for Magic here, look at the potential here. We're probably already on our way to like $2 for Magic. Of another, I would suspect a larger trading range here. We could be up $3 to $5 in that same move that when the S&P 500 goes up just 20%. So there's some real strong indicators to believe that would be the case. Now, double click the right hand axis to reset the scale. Oh, thank you, bro. I appreciate that. Always helpful tips from the Bear family. Let's take a look at Gala Games. We've been watching this one quite closely. We just had a really strong supply signal come in. There's maybe a bit too much out there in the general market, because I've been watching the market maker at play here with some of the people who own the token and are selling just on public market. And first off, notice the declining supply signature and decreased volatility within the spread. These are hugely bullish factors. We talked about this in the last video as well. Declining supply, rising price, decreased volatility throughout that trading range too. So this to me looks really good. And we had our first sign of strength come out the back of this morning, where it pushed us all the way up to 56. But again, we had a huge amount of supply coming to the market, both on Bitcoin as well. And these are all interlinked. You know, you've got basically central market makers who are controlling a bunch of prices together. So they're pretty tightly linked for liquidity. Huge dump, retest the top of this channel that we had been rising on for the last 4 or 5 days. Yeah, here you go on the 4 hour. This rising channel we've closed above that, and we're continuing to move up. So I suspect we're going to see another few big bites of the market maker. And on the 6 hour, that would have us pretty damn quickly moving up to the first middle ground of this range, which is approximately here around 7 cents. So we have first kind of primary top of this trading range, I believe, is at 10 cents. But it looks like over the next 48 hours, we'll probably move up to 7 cents here. Yeah. So that's my thoughts at the moment. I'll take a look at your guys' questions, and we'll kind of freestyle from there. There was something else I wanted to look at, but we'll get back to that. So here's a moment for some of your guys' thoughts and questions. Time to grow. Sounds like a potato idea. Yes, Kelvin Chasing, you're right. I can't even say what you've written on YouTube without getting banned, I'm sure. But yeah, I believe you're correct. All of the data is damning. Holy crap. What's up to you? Yes. Debt ceiling equals game over. Yeah, there's no such thing as a debt ceiling. That's just some made up term. There's no debt ceiling. If there was a debt ceiling, we broke through it a long time ago. And the USA has a like raise the roof type mentality, bro. What are you talking about? Debt ceiling? No. There's no debt ceiling. They're just going to raise the roof. That's all they do. If you think we don't go lower, get a lower low from the move, you might want to take 50% now. Keep there's no lower. At least you have some on the side. Yeah, this is an upcycle. We're in an upcycle until we see a larger distributional trend, and we're in the first reaccumulation aspects of a multi-month accumulation. So I'm not going to worry about down for another 90 days, approximately. That's my thought there. Does the 200 moving average weekly rejection above worry you? Okay, well, let's take a look and see if I can find what you're talking about. First off, no, I don't think moving averages are a huge indicator. They're definitely helpful. But instead of just talking about it, let's take a look. So I believe on the bear claw here, our 200 is the blue line. Yes. Actually, let me just double check. It's been a while since I've opened the bear claw. So visibility, inputs, style. Oh, smooth moving average is the green one. Yeah, we'll make it pink so it kind of stands out for everyone. Wait a second. The 200-day moving average, we blew right through the 200-day moving average. What are you talking about? This is this blue one that I just changed. Well, I'll change the blue one too for fun. That's the simple 314-day moving average, which we will make bright red. No, let's go bright green. Yeah. So the 314 simple day moving average is bright green. We haven't come up and touched it yet. We blew right across the 200-day simple moving average. So I'm not sure what you're talking about there. I don't know what that means because, oh, weekly. Sorry, you wrote weekly. My bad, bro. Okay. We have not rejected off the 200 simple week moving average on the bear claw here, this red one. Yeah, that's not a rejection yet. Again, I'm more interested in some of the supply characteristics here. So for instance, notice how the back part of the range here again started declining in supply dramatically throughout the spring. This is important here. And this small chunk of supply pushed us all the way to the top of the box. So if you measure out us from where we were and the amount of supply it took to get down that low, you're talking about 36.95 million in volume. No, not dollars, that's Bitcoin. So today, to where we are, it took only 5.6 million in Bitcoin volume to get all the way back above what 5.69 million Bitcoin or 35.69 million of Bitcoin selling pressure had got us down to. So we are rising on significantly less supply. That's so important to remember. This is really early still. So we've got around, based off that judgment alone, we could still go another like 3x from where we are. So that could be all the way back up at 60 grand. Again, I'm not going to get too bullish yet, but what's nice here too is you can start to see that the 200 simple plus the EMA claw and the 314 are actually both the bottom and the top of this trading range, which we are following to. So everything looks bullish to me. I don't think there's any reason to leave that behind until we see a large shift in trend. But for now, the change in character that we saw is to the bullish side. For instance, again, this moment right here, this spring, when you see a large amount of interest come into the markets, this is the first change of character. It's not going to be the last. The market maker doesn't give up here and try to drive the price down. It's very, very unlikely, especially after a nice formation like this. What's more likely is that they push it all the way to the top of the box in multiple assets, probably for about 90 days. And then when they're at the top of the box, I'd be a bit more worried, because then everybody's going to be asking about Bitcoin again. My general contractor would be like, should I buy another whatever house in Bitcoin? I'm like, bro, I told you just to keep. So until we hear those ideas start to come back, there's very few bulls in the market. The bulls that are in the market right now are the smart bears, the people that have been accumulating for a long period of time and looking to run up the market so they can distribute the rest of those shares. So it's not a short one. Oh, no chart. Jeez, I'm sorry, guys. Okay, so okay, there we go. My bad. Jeez. Let me do this again. I'll show you the supply signature. Okay, yeah, here we go. Back to the daily, and we'll throw the bear claw back on too. I'm sorry. I'm sorry about the screen share. Yeah, I know. It's surprising. I'm looking at my screen, guys. Can't you see that I can see? No, it doesn't work like that apparently. So here we go. Sorry about that. I'll try to be better at this. Okay, there we go. Chart is now showing. My bad. Okay, so here, these are the parts we just went over. I'll just recap really quickly. Falling supply signature, boom, all the way here throughout the duration of the spring, and we've risen on much less volume than it took to get here. So from the price that we are at today, we're going to measure that in the supply range itself. So we measure from approximately here, which is August 29th, all the way to the side of the spring, which was 35.2 million bars of volume for Bitcoin's price spread. So we've been able to overcome all of that downwards trajectory with just 5.62 million in Bitcoin volume, and not dollars, by the way. So that's a very bullish change of character from the amount of downward pressure it took to get us this low to how easily it was to climb back up to the top. Secondarily, you have both, as you pointed out, on the daily, the 200 and 314-day moving average starting to build the top of the trend line. Now, you asked about the weekly, which is what I was also talking about. The weekly has not yet come up to touch the top of the trend line. Now, again, we could make an argument that this is only phase B, and that we're going to come up to 24,000, maybe as high as 27,000, and then we'll get pushed all the way back down to the bottom of the box, and we'll see more capitulation potentially. But for now, we're still going to go a little bit higher. I suspect at least 26,000. So at 26,000, it's going to be like a Hawkeye moment. If we start to break down here and get distributional patterns, we're going to come back all the way back down to 16,000, 17,000. But again, it's the S&P that's kind of giving me the bull market vibes of if we go up 20% in general equities, we're just going to see everything rip, roar, scream, melt your face off, suck all the last hesitant bulls back into the market. So this is kind of one of the more contentious leading indicators that we're looking at. Now we could take a quick look at the dollar. It's dropped down in price today, not much though. Again, it's been basically straight down. Hey, just no support. Let's look a little closer here. Yeah, this doesn't look like a... Oh, okay, well here, you do have some bullish divergence on the 4-hour. So there is reason to believe that the dollar will do a little bit of up here as well. But I woke up this morning and the VIX was green, the dollar was green, and the S&P 500 was green, which makes 0 sense. So we're also starting to get into the area where something's broken in the back end here. Like if you're a traditional TradFi trader, you'll know what I'm talking about. If you see the VIX, the dollar, and the S&P 500 all green, something is wrong. Like it's not supposed to do that. The VIX is supposed to be an inversely core, and a lot of people make big bets this way. It's very rare that you'll see the VIX green and the S&P 500 green and the dollar green. I don't know if I've ever seen that before. So something weird is going on. People want to talk about manipulation in the markets. It's just buying and selling. That's the manipulation. People are either buying or they're selling. There's nobody like manipulating the price behind the screens. They can just either buy or sell that product. And now you might be able to manipulate how much of a said thing you could buy or sell. That's a different conversation, but I think that's called fraud. I'm not entirely sure. So one of the things to be careful here is to think that the dollar is going to turn bullish here when there's no reason to think that it could. It could come up to here and come back down much lower. So I would be cautious about the dollar more so than this, but we're keeping a close eye on it. I'm ultimately thinking we're going to go a little bit higher, but I guess time will tell. I would be more cautious with Bitcoin's price up around $25,000. Not right now. Not right now. We're just going to probably get another reaccumulation bar, which is exactly what it looks like. It looks like a pretty sexy one's already forming, where we're just getting this nice horizontal range here. And we'll probably move up to around 25,000 after that. And then I would be cautious because you'll start to see a bigger capitulation and price test. Maybe something like this between 25 and 23,000. You should play some wind chimes and have running water while you talk. That's hilarious. Can you hear the crickets? Yeah, probably. It's actually cicadas. Cicadas are so damn loud. Asking about total market cap. Look, this looks bullish too. This looks like a perfect horizontal trading range. This is excluding Bitcoin. But that looks like a bullish move to me. And again, we just had a change of character. I don't suspect it's identical. This looks bullish. I don't know what you're talking about. Even the crypto total market cap looks bullish. And on the daily here, you can see we broke out of a trend line, like a long-standing trend. So this is why I suspect that we're actually in a part of the reaccumulation cycle. And you could see a doubling of some of these markets, potentially, because, money's, or the US dollar is fake. It's only real because people believe it's real. It's like a fairy tale. So, anyways, I appreciate. You guys did ask me to play a little bit of flute to end off today. So that's what I'll do. Just a little bit of some native flute to end the live stream.